All right. Happy Friday, everybody. Happy Friday, all you magnificent melon heads of the world. It's my favorite time of the week, my Friday afternoon live stream, where we wrap up the week that was, talk about the week that's coming. And, well, what are we going to talk about today? It's got to be gold, right? It's got to be gold. It's got to be silver, because that is probably the biggest story in finance right now. That and the whole AI mania thing and all-time highs, and maybe World War III, also a big story. Yeah, World War III, that's kind of like maybe it'll happen. They've been telling us for a couple of days, any second now, there's going to be a big attack from Iran. They told us that last week, and then they told us that Monday, Tuesday, Wednesday, Thursday, and today. Still hasn't happened. Not that I want it to happen, but I guess eventually, if you keep saying it, eventually it'll be right. So what is moving gold here? Why is gold moving? We've got interest rates going higher, and we've got a dollar that's getting stronger. Gold historically hates those things. So why does gold keep moving up? What does gold see that we don't? Or maybe I should say, of all the things that we could see that would make one want to own gold, or hold it, or silver for that matter, just like me. I like the shiny. What is making the price of gold rally? Is it the prospect of war in the Middle East? Well, that's hardly a new prospect, is it? War in the Middle East has been a risk that's been hanging over this market, this whole world for what? I don't know, 50 years, 60 years, longer than that? Longer than I've been alive, that's for sure. That's not new, although it's certainly escalated, right? Since October of last year, things in the Middle East have gotten worse. The Israelis did attack an Iranian embassy in Syria, and we are largely expecting some retaliation for that attack. There's actually air raids going on in northern Israel right now. Based on what I've seen on the OSIN channels, it looks like rocket attack from southern Lebanon into northern Israel. So not necessarily this big Iranian retaliation they've been calling for. Could be a precursor to it, right? If you use up all the interceptors from the Iron Dome or all the Patriots with little rocket attacks, and then the big Iranian stuff comes in behind that, maybe that's what's going on. That could be something that has people running to gold. What else we have going on? Commercial real estate. Maybe that's got people running to gold. Maybe people are starting to worry about counterparty risk. You guys remember Exter's pyramid? That was all the rage during Silver Squeeze, right? There it is. Yeah. Hi, Exter. Counterparty risk. The further up this pyramid you go, the more counterparty risk there is. And the further down you go, the less counterparty risk there is. Well, look, all the way down there at the bottom, that's gold and silver. Just above that is paper money, then T-bills, government bonds, all the way up at the top, unfunded liabilities, and derivatives. So maybe it's counterparty risk that has the market running to gold, because gold has no counterparty risk as long as you hold it. If you own your gold in somebody else's vault, when all's said and done, when all the counterparty risk starts going bad and everybody starts playing defense, even the people that are holding your gold for you, watch how quick they say, no, Jack, never heard of him. This is my gold, not Jack's gold. So maybe that's what's going on. And the bank earnings today probably support that. I tell you, I talked about it a lot in my morning live stream this morning. But when I see net interest income at JP Morgan getting squeezed, at Wells Fargo getting squeezed, I mean, think about that for a minute, because JPM, Wells Fargo, these are the guys, the behemoths that got even behemoth-er back in March of last year, when all the regionals were struggling, when Silicon Valley, Silicon, First Republic, Credit Suisse, when they were all going down, JPM was getting bigger. All the money in the world was running to the big banks. They didn't care what interest rate they were getting. They just wanted the perceived safety of a too-big-to-fail GSIB bank. And so they flocked to the big ones. But this morning with the bank earnings, JP Morgan says our deposits are falling and our net interest margin is falling. Well, crap, if that's going on at JP Morgan, then what do you think is happening at New York Community Bank, who's paying out the highest interest rate in the whole market? A bank that was on life support just a few weeks ago. And yeah, Mnuchin and co came in with $1 billion and shored up liquidity for a little while. But don't for a second think all the hard stuff is behind them over at NYCB. And there's a whole slew of other banks that are going to start reporting next week. And if JPM and Wells Fargo were iffy this week, then watch out for what happens next week. Maybe it's the commercial real estate sector that they see. Maybe it's the fact that tech stocks are trading at freaking ridiculous valuations, and that unless you're one of these bros who's selling copies of your newsletter telling you to YOLO into NVIDIA calls, anybody with two eyes can see that tech is in a bubble right now. Oh, there's going to be quadrillions of dollars in demand for NVIDIA's chips starting as soon as next year. No, there isn't. No, there isn't. You know what the AI mania is? It's a bunch of companies speculating that the demand for AI is going to be so big. And so what they're doing is they're all borrowing money from private equity who's afraid to admit what their investments are worth. And they're pumping that money into buying these chips because they have plans to rent them out later on. That's not innovative. They call themselves hyperscalers. They're GPU renters. That's what they do. They buy GPUs and rent them out. Okay, call that hyperscale. Great. Half of them are money launderers, by the way, but that's no big deal. We'll talk about that later. Maybe the market is starting to realize, stocks have run about a year and a half longer than they probably should have, which, by the way, that mania has been about a year and a half old. And what do we actually get? I mean, I've used some of these AI apps. You get pictures of people with disproportionately large facial features, missing fingers. I mean, it's a productivity enhancing tool. I mean, me and my buddy were using ChatGPT on another project over this past week or so. It helped, but a quadrillion-dollar industry? Hell no. Maybe that's what gold sees. Or maybe it's all of the above. I don't know. But let's talk about next week real quick, because next week we might get some of the answer. Let's talk about the companies that are reporting next week, because we got big bank earnings have started. We got more bank earnings coming up. We got a lot of regionals, a lot of small banks reporting next week. On Monday, we got Goldman Sachs. We got Charles Schwab. We got M&T Bank. That name, M&T Bank, has come up a lot of times in conversation over the last few months. And a lot of different people who are, to my knowledge, not even in the same sphere of influence, like people who don't even know each other, coming to me talking about M&T Bank recently. A lot of commercial real estate exposure there. Watch out for that one. What else do we have? Guaranteed Bank Shares on Monday. That's another one that's got a lot of commercial real estate exposure, a small one. Tuesday, we got Louis Vuitton. That's always fun because, consumer spending, the consumer is in debt and he's broke. And yet somehow we have that economic theory that during hard times, women buy more makeup and not less. It's like a Haagen-Dazs, like stress eating kind of consumer behavior. So I wonder, are we going to, well, that's Louis Vuitton. That's not makeup. That's luxury spending. But you get my point there. I wonder what we'll get from Louis Vuitton. The luxury consumer has done all right so far. It's the low-end guys that are really hurting. We also got United Health on Tuesday. What are they going to do? That hack? Is that hitting their bottom line? Are we going to get more information on just how severe that hack was? We got J&J on Tuesday. J&J's had some really good quarters because of a lot of people putting off deferred elective procedures during the pandemic, and now they're all scrambling to get that done because they waited too long. And so J&J's actually done pretty well with their medical device sales. We also got Big Bank of America, Morgan Stanley, PNC, Bank of New York Mellon, United Airlines. Are we going to hear from UAL about maybe some problems with Boeing? That's on Tuesday. Then Wednesday, we got U.S. Bancorp, commercial real estate name. Watch for that one. You've also got Citizens Financial Group. That's another one might have some commercial real estate exposure. Then on Thursday, Taiwan Semiconductor. Maybe we get some clues about AI mania with that one. We have also got Netflix. That's a big name. Blackstone, L'Oreal on Thursday. There's your cosmetic sales during times of stress. D.R. Horton. I wonder how the home builders are doing now, holding up with these higher rates. Also, American Airlines on Thursday. Another one to watch for Boeing things. Comerica, Western Alliance Bank. Those are two names that you have some commercial real estate risk there. Friday, you've got American Express. That's a good look at the health of the consumer. Fifth Third Bank. That's another one that's probably got some commercial real estate risk. And Harmony Gold Mining on Friday. That's one that I own. The miners have largely sat out this rally in metals. Wonder if we're going to hear from them next week. Speaking of this rally in metals, Mr. Slammy returned. He is once again back in the driver's seat. I was asking, hey, Mr. Slammy, where are you this morning? We broke that 28.30 important technical level in the price of silver yesterday. We've only closed above that level 3 times since 2020. 4 now, if you count yesterday. And I had to open my big fat mouth because Mr. Slammy apparently was listening to my morning live stream, and he showed up in a big way, largely expected, had a lot of big intraday move, we'll say, in the price of metals. Doesn't mean this rally is over. It just means the people who want gold and silver lower are not taking the day off. We got a lot to talk about today, guys, but we got plenty of time to do it. So let's shrink my big melon of a head and say hi to my moderator, Mish. Mish, how are we doing today, brother?
I'm doing great, man. I'm here from Tbilisi, Georgia.
What was the name of that city again?
Tbilisi,
Georgia. And by the way, Georgia, we're talking Balkan, Georgia, not down south here in the States, Georgia, correct?
Yeah, next door to Russia, Georgia.
Yes, next door to Russia. All right. Well, how are things in Georgia? How is the state of the consumer, the inflation? I mean, what are you seeing as far as in this part of the world, the life of the average person in Georgia?
Well, we had talked about how bad the inflation there was with food. And, even like this guy had a ream of paper that a year ago he bought for $1. Today is $3.20. Food here is a lot cheaper. Just everything here is a lot cheaper. It is interesting, though, that I met two draft dodgers from Russia that opened an Italian restaurant here. I thought that was an interesting choice of food.
Two Russian draft dodgers fleeing Russia, opening an Italian restaurant in Georgia.
Yes.
That checks a lot of boxes. All right. Well, the people you meet on the road.
Yeah.
Well, why don't we take a look at what's going on in the market here? And guys, we're looking at CNN's Fear Greed Index. And to my knowledge, this is the first time in 6 months, maybe 7 months, that the needle has been to the left of center. I have not seen this needle swing towards fear since I think the end of October last year. It's been a tick since this thing has been anywhere close to fear. Still a neutral index, but we had a big drop in the Fear Greed Index today. And why was that? Because we had a big spike. And when I say big, I say let's make this relative to where it's been trading at over the last few months. We had a big spike in the VIX today. All right, the VIX started the day around 14, 15, spiked as high as 19 and change, currently sitting at 18.21. All right, this is the volatility index. It's based on options pricing. There is a lot more fear in the market this morning than there was yesterday. Now, I mentioned that relatively speaking. Give me 1 second, Mish. Relatively speaking, because when you zoom out on the VIX, you can see that, the VIX is on the rise, but still relative to where we were a year ago or where we were at the height of the pandemic, we're nowhere near a volatile market. Just wanted to mention that. Sorry, Mish, I cut you off there. What's up, brother?
It's fine. I was going to talk about volatility since it's literally the volatility index. A lot of people are saying because of zero-day trading, zero DTs, that it's kind of artificially keeping it lower and more even than you would expect it to.
Yep, the zero DTE trade, a lot of people moving in and out of options on a daily basis. There's a lot more liquidity in those short-dated options. That has the effect of suppressing volatility. You've also got a lot of people are doing this short vol trade, which, it is easy money shorting volatility in a low volatility environment. But the analogy I used the other day and what a lot of people compare it to, it's not my talking point, it's someone else's. It's picking up pennies in front of a steamroller. It's great. You're going to make a couple of easy pennies, and then one day you're going to get run over and smushed, and you're going to look pretty stupid because you're going to be a muddy red pancake with a penny in your squished hand. And that's what happens when volatility blows up in those short vol trades. Look up what happened with Volmageddon in 2018. That could happen here, especially with all these people short volatility. You end up with margin calls and they get squeezed out. You could end up with a mess in markets real fast. So that's the VIX here. Look at the S&P, currently down 87 points, 87 and a quarter points at the session lows as we head into the close here, the last half hour of trading, down 1.68%. Let's look at the S&P on a little bit of a long-term chart. We haven't done this in a while here. These are daily candles that we're looking at. This horizontal red line, that is the previous all-time high from 2022 before that big correction that we saw in 22. I'm sorry, that's from November of 21, the all-time high. We broke through that this year. The blue line here is the 50-day moving average, and the other red line here is the 200-day moving average. And if you see where we are right now, we are sitting right on top of that 200-day moving average in the S&P 500. If that breaks, look out below. Next support is at the 200 line, which is 46.58, a long way down from here. So S&P is at a pretty important technical level right now as we head into the close. The Dow is down 561 points today. A lot of these 500-point down days lately, 1.5% lower for the Dow. Now, I just want to look at the same long-term chart of the Dow. These are, again, daily candles. The Dow actually gave up its 50-day moving average earlier this week, just a couple of days ago. So we've now moved below that level here, currently 37,886. And looking onto the NASDAQ, the worst performer of the day, down 300 points on the NASDAQ, 1.83% lower, trading at 16,140. And again, going to that long-term chart, daily candles, we're not quite to the 50-day moving average, but we are sitting right on top of that previous all-time high from 2021, just barely above the 50-day moving average. And let's zoom out a little bit here, going all the way back to late 2021. And, you know, if we are looking at a reversal here, guys, that's a pretty profound little double top pattern we got there, don't we? And if you take the magnitude of the move from the high of the double top all the way down to the low, the pattern is predicting something like, oh boy, let's not go to that level. That would be, no, we're not even going to talk about that level in the NASDAQ. It's a lot lower than where we're currently at. Let's hope we don't go anywhere near completing that double top pattern in the NASDAQ. It's probably not good for your AI stocks if we go there. U.S. dollar, currently the Dixie at 106.04, up 76 basis points today. The Dixie just broke 105 earlier this week, and we're already at 106. We got a stronger dollar, and this is one of the things that's got me scratching my head about this run in gold. All right, any given day, I like precious metals because I like the low risk profile. I like protecting it from counterparties. Plus, I think gold is historically undervalued. But when the dollar gets stronger, gold is not supposed to do well. When interest rates head higher, gold is not supposed to do well. We're seeing those relations break down right now. And the bond market today, again, I used the phrase a leisurely stroll to safety this morning, and I think that one's holding up now. We've still got upward movement on the long end of the yield curve this morning or this afternoon. The 30 years at 4.611, down 5 basis points. The 10-year, 4.507, down 7 basis points. 2-year, 4.888. Down 7 points, and the 1 month is at 5.388. That's up 1 point today. Also happening today of interest, I saw this one. Overnight reverse repos hit $407 billion today. Shout out to my buddy Keenan Haywood, who loves to track this one. That is a new low, not quite a 3 handle, but a new low for the reverse repo as we head lower. The decline in the reverse repo has kind of stalled out here, but if we get into some trouble with the regional banks next week off of the earnings report, I think we could start to see some big drawdowns in the reverse repo coming out of that. So we'll keep an eye on that one. Now, commodities. Let's talk about what's going on in commodities today. Gold, not so much the news, right? 23.59 for gold. That's a phenomenally high price. But look at the high and lows here. Now, just the June futures traded at a high today of 24.48 and a low of 23.50. Since when does gold trade up and down in a $100 range in a single day? All right, that ain't normal, guys. That's pretty freaking far from normal. Currently down 0.6%. Silver, May silver futures, 28.17. Traded as high today as 29.90. Currently at 28.17. That's down about 0.25%. Now let's talk about this one here. I saw this tweet from the Kobayashi letter today. This is a pretty good one. I think this really, really well does an excellent job of summarizing the state that we find ourselves in here. All right. He's saying this is very strange. Gold is now up 30% in 6 months, posting one of its best 6-month gains in history. Now, this is from this morning, so obviously the price smash that we saw today is not included in this. He says, however, during this time period, 4 rate cuts have been priced out, and the U.S. dollar just hit its highest level since November of 2023. Meanwhile, risk on investor appetite is at all-time highs, and crypto just hit a new all-time high. Right? We got crypto prices surging. We got AI stocks trading at obscenely high valuations. This is risk on behavior in these markets, yet gold is doing well. He goes on here to say every single factor that has historically led to lower gold prices is happening now. Except for two key factors, central banks are stocking up on gold and geopolitical tensions are skyrocketing. I think he's including the Chinese buying of gold in the geopolitical tensions there. When gold is behaving so strangely, it leads you to one key question. Does someone know something? Who knows what? What is it? Who is that someone? And what do they know? What can gold see? Well, let's talk about some of the many things that gold might be seeing. Now, first of all, when you look at gold, there's Mr. Slammy. He's back. We were wondering where he was this morning. I had to open my big mouth. Spot gold went as high as what, 24.32, went as low as 23.34, $100 intraday swing in the price of gold. Good God. I'm not too worried about this price smash today, to be honest with you. I was expecting it. I'm surprised it didn't get here sooner. But let's also keep it in context. Gold has been smashed all the way back to where it was trading at lunchtime yesterday. All right, so it's not like we've unwound this whole big move in gold. We had a really nice move last night. Everybody was tweeting about it and loving it. Yeah, finally it's here. The price manipulation scheme is broken. Not quite. And let's also, guys, not discount what scumbags the shorts are in this industry. Let's expect things like margin requirements to get jacked up. So be careful, you guys who like to trade on margin right there. You might get a phone call that says, well, at the COMEX, they just changed the rule. Now you have to post 10 times as much margin in your account as you currently have in there. Oh, well, we're selling your long position. And you take a huge loss. They did that during the silver squeeze. We could see a change to the gold and silver ETFs. We could see a coordinated media campaign aimed at making gold and silver investors look like nutty preppers or something like, who knows? We've seen all this stuff before. So let's not act like they won't do it again if it means defending their own positions. I'm actually surprised it's taken them this long. But that being said, even with this smash, we're only back to where we were trading at a few hours ago.
Same thing. I think what they're doing.
Go ahead, Mitch.
What I think they're doing is actually just lowering the price to make it cheaper for India and China to buy it on Sunday night.
That might be the net of effect. I mean, you think Western banks are doing that on purpose so India and China can buy it?
I don't think necessarily they're doing it on purpose, but that's the net effect.
Yeah. Well, I can tell you the last time we had a move like this in metals, right? January 2021. Was it January, February? Yeah. We weren't fighting central banks. And by we, I shouldn't say we. The price manipulators were not fighting central banks. Central banks weren't buying gold hand over fist in February of 2021. They were issuing currency hand over fist. So, right now what they're doing, they're kind of fighting against central banks here, trying to keep the price down. Not our central bank. They're not fighting the Fed, but they are fighting the People's Bank of China. They're fighting a lot of the European banks that are buying the stuff up. So central banks buying gold, that's quite a headwind. You've also got the big arbitrage opportunity that has shrank between Shanghai and London. That's got physical metal flowing west. So I think they've got a harder job in front of them here to try to hold the prices where we're at, especially considering what I think the scale of the monetary debasement is going to be required to maintain asset valuations at these ridiculously high levels. If they're going to really defend the NASDAQ at 16,000 when all of these tech companies start blowing up because they've been round tripping their own cash and overstating the demand for their products, they're going to have to print a hell of a lot more money than they've been doing recently. And good luck suppressing gold when that happens. And look at how gold ran in, we'll say, like May to August of 2020. This feels a lot like that. Everybody was expecting inflation in May to August of 2020. They had just printed all the money. The inflation was still low, but we knew it was going to get worse, and it did. And the price of gold rallied anticipating that. It feels very similar. So that makes me say maybe it's just the anticipated second wave of inflation that's driving this big run up in gold. That's plausible. Also, let's look at the Mr. Slammy here in silver. Oh, look at that one. That red line, by the way, these are 1 minute candles. And this red line, this is that 2830 level that I had drawn your attention to, that I said, I want to see us go above that level with some meaningful momentum. I want to see a retest and a move back above. Well, we got slammed right down below that level. Currently 28.04 for spot silver. But again, guys, we got smashed all the way back to where we were trading at yesterday at 3 p.m. So this big price slam, who knows how many paper ounces they had to issue. What did they really do? They rewound the clock by a day. If that's the best they got, then come at me, bro. Because that's some pretty weak sauce. I mean, yeah, they moved the price $1 intraday, but all they did was rewind the clock 12 hours, 24 hours maybe. Now let's talk about some of the other economic issues going on in the economy that might possibly explain these moves in precious metals, this breakdown of the correlation between interest rates and the dollar. I saw this one over at FreightWaves today. Continuing breakdown in logistics. Over 1,300 layoffs hit logistics companies across the U.S. Texas, Florida, Illinois, Michigan, and Georgia firms say market conditions and a loss of customers is forcing job cuts. All right, job cuts from truck drivers and the guys who work at the loading docks, that is not a good indicator of economic activity. I don't care how good your generative AI model is. If they're laying off truck drivers, the economy is in trouble. And they're laying off truck drivers. Universal Logistics laid off 677 employees in Michigan. Swissport Cargo Services laid off 235 workers in Atlanta. Who else we got? The Kroger Company laid off 230. That's at their delivery hubs in San Antonio, Texas, as well as Miami. A couple of other ones. RXO Logistics laid off 114 people in Warren, Michigan. Nosco Inc. laid off 51 people in Texas. Ryder Integrated Logistics laid off another 30. Okay, we're getting into small numbers here, but you see the pattern here, guys. Hundreds of layoffs, and it's not just any one company, and it's not just any one region. It's all across the country. Stuff's not moving, and they're laying off truck drivers. They're laying off the guys at the loading dock. Also, check this one out. Shout out to Macro Edge on X, by the way. Excellent Twitter feed. If you guys aren't following Macro Edge, you should. I could tell you, Mish and I visit Macro Edge on X an awful lot. They're fantastic. And this job cuts tracker is actually really good. They were accurate to within like 1,500 jobs of what the Challenger job cuts report came out with last week. I mean, their job cuts tracker was like right on the money with Challenger, which is like the biggest employment data analytics firm that's out there. And Macro Edge got really, really close. Pretty impressive for a new outfit.
Well, and they're 100% on news reports. They're not following the reporting. They're just gleaning this from reports. So it's even better on them.
So they're just tracking announcements, right? Like they're what's the word I'm looking for? They're compiling anecdotes and coming up with data points that's right on the money with Challenger. That's pretty good. And look what they're saying about April. 44,369 as of this morning. It's only the 12th day of the month, guys. So we're on pace for something like 110,000 job cuts to be announced this month, which would be more than January when all the big tech layoffs were getting announced. It's not good for the employment situation. But don't worry, we added 303,000 jobs, right? According to the BLS data. Okay. That's a lot of people making coffee at Starbucks. Another thing going on. I saw this one. Let's talk about commercial real estate for a minute now, because shout out to Melody Wright on X who posted this one. That's another account you guys should be following. Melody Wright on X and on Substack. She does a lot of job tracking mortgage finance, and I thought this story was really interesting. Cheap mortgages deter workers from relocating for $250,000 jobs. Now, this article focuses on managerial positions at auto plants in the Southeast. They're saying they're having trouble getting people to leave Michigan and move to, like, say, South Carolina, where a lot of new auto plants are getting built. But forget the specifics of that industry for a second. Look at the numbers here. A $250,000 job people won't leave their current house for because of the golden handcuffs of that 2.5% mortgage that they signed up for. So what does this tell you about commercial real estate? Why do I think this is important for commercial real estate? Well, if a $250,000 salary can't get somebody to give up their current mortgage to move to a new area, then how else might you attract top talent? You'd have to offer work from home. If $250,000 a year won't get them to give up their golden handcuffs, then the only way you're going to get those people to come work for you is if you let them stay where they are. Now, how are we supposed to be finding a bottom in commercial real estate? How are these office buildings supposed to recover if this is going on? Because that means work from home isn't going away, or the companies that don't offer it won't be able to get the best talent. So this is bad news for commercial real estate. This is bad news for office. And, well, let's talk about some bad news for office, shall we? Look at this one. Downtown Baltimore office tower. Go ahead, Mitch.
Hold on, Jack. It's not only bad news for CREs in that context. You're right. With the golden handcuffs, people aren't putting their houses up for sale, and they're not buying new houses. So then they have to rent. Well, you're not going to get rent right now for what you're paying on the house. So it's just a spiral. So, yeah, you have to get someone up $350, $450 to go buy a new house and still have the old house they're in. Yeah, it's just not working these days.
And that's also upward pressure on wages, isn't it? And that's also upward pressure on home prices, upward pressure on rents, all those things. Commercial real estate is in big trouble here.
Your boy Phillips calls that wage push inflation.
My boy Phillips, me being the Keynesian economist that I am. Yeah. Wink, wink. Let's talk about this one. This is kind of interesting. Downtown Baltimore office tower owned by the late Peter Angelos will be auctioned off. And I took notice of this one because this is right down the street from a brand new skyscraper that the company I used to work for just built. And, fun story. I was voluntold that I had to submit an idea to my company back in 2020 when I was working remote. I was voluntold by my former supervisor, who was a really nice guy. I had a lot of respect for him. One of the nicest guys I ever worked for. He's actually the reason I left my day job sooner than I absolutely had to, because I didn't want to do my job half-assed for him. But he voluntold me to sign up for this innovation thing where I had to voluntarily submit an idea for the company. And, this was like mid-2020, the height of the pandemic. And the innovation idea I submitted was basically saying, I think the commercial real estate is going to collapse because of work from home. And I think the company needs to implement something like an office space sharing app within the company where people can reserve cubicles that they need for the days that they're in the office, or reserve conference rooms for meetings. Basically, come up with a system for the sharing of office space so that the company could unload their commercial real estate assets before the market crashed. Well, I didn't win the innovation idea, my submission. But shit, in hindsight, maybe that wasn't a half bad idea. Excellent. Just throwing that out there. Maybe I don't know. Because the building right down the street from the new skyscraper y'all built is hitting the auction block. And, well, let's look at the numbers, shall we? Let's look at that building and the values there. The first modernist office tower in Baltimore will go to auction in April, starting at $1.5 million. One Charles Center was designed by famed architect Ludwig Mies van der Rohe, that's a mouthful, and finished in 1962. The aluminum and glass building at 100 North Charles Street was added to the National Register of Historic Places in 2000. Former Baltimore Orioles controlling owner Peter Angelos, who died in March, paid $6 million for the building in 1996. A recent state assessment valued at nearly $10 million. It's hitting the auction block for $1.5 million, guys. Now, I don't know what inflation adjusted $6 million in 1996 is. I don't want to know now that I think about it. But if you're trading at a quarter of the value you traded at in 1996, unless you're a VHS cassette, that's not a good thing. And now I thought this was even more ironic. All right, so $1.5 million for his 346,000 square foot skyscraper. And then at the end of the article, they say his 3-bedroom, 3.5 bathroom condominium at the Ritz-Carlton, that was recently listed for $1.7 million. So $1.5 million for his 350,000 square foot tower and $1.7 million for his 3-bedroom condo. That is the state of the commercial real estate market. And we just talked about yesterday about what was going on with that Baltimore tower. No, was that Baltimore? St. Louis, the AT&T tower in St. Louis. Yeah. That one lost 98% of its value. Guys, these banks that are going to start reporting next week, there is no way these numbers aren't going to crush banks. There's no way to hide losses this big. The extend and pretend, the lying about the cash flows from the buildings, all of this stuff, maybe it can delay it, but these numbers are just way too freaking big. There is just no way. There is no way this isn't going to cause mayhem in the banks. And look, what we just saw from JP Morgan, they're getting squeezed. Their interest margins are getting squeezed. Their deposits are shrinking. And if that's happening at the big banks, then the little banks that own this crap, what's going to happen to them? Got big problems coming in the banking sector, guys. Really, really big problems. Now let's shift to another category. Why is inflation coming back? Maybe because we had all this monetary expansion and we invested in things that didn't really add any value. Right? How much money did we print or did we borrow in the last few years for the Inflation Reduction Act, which was essentially the Green New Deal? We poured all this money into EV production, and what do we get? Well, here we go. Just yesterday in Bloomberg, another story about another price cut in electric vehicles. Ford again for the F-150 plug-in pickup. Ford cuts price of F-150 plug-in pickup as EV demand falters. Reductions of up to 7.5%, partially reverse early year hikes. The automaker is rethinking the EV strategy as some consumers balk, and yet we continue to subsidize this industry. Why are we borrowing money at higher interest rates to subsidize an industry that is faltering despite those subsidies? Ford Motor Co. slashed prices of its electric F-150 Lightning pickup truck by as much as 7.5% as its EV inventory balloons, and the automaker prepares to resume deliveries this month following a halt earlier for an undisclosed quality issue. The price cuts put in place April 5th partially reverse hikes in January as Ford was reducing production of its signature EV model by half and eliminating a shift of workers. The Inflation Reduction Act was supposed to grow American industry and create green jobs. So we spent $1 trillion or whatever we actually spent now. I mean, I'm sure the money was earmarked over 10 years or whatever. And yet the opposite is happening. They took the money from the government and they're laying off workers and they're cutting back production. The Inflation Reduction Act was a joke, guys. I mean, most of you, I'm probably preaching to the choir here. I think most of the people watching this live stream probably knew the Inflation Reduction Act was a freaking joke while it was being debated. But in case you were on the fence, guys, did it reduce inflation? Do you feel like your inflation has been reduced after 3 consecutive higher CPI prints? Do you feel like the Inflation Reduction Act had the desired effect on target? Or maybe you want to see a little bit more of the totality of the incoming economic data before you make a judgment call. You do you.
Well, the biggest winner of the IRA, whatever, was Tesla, because Tesla realized early on to go ahead and make them the big, everyone is going to use the Tesla model for charging. So then Tesla's company becomes the number one company of building these chargers because everyone's using Tesla's chargers.
And so how's that working out for Tesla?
Actually, they've got a profitable charging business now of like 15, 20,000 charging stations. Because now charging, you can do a full charge in like 20 minutes on the newest ones. The old ones is still like 14 hours.
But that's another one that's had to slash their prices. They've had to, I don't know if they didn't curtail their production, but they missed their delivery targets, and it's probably a good thing they missed their delivery targets because the inventory is piling up, much like Ford.
Two separate businesses. They have their charging business, and then they have their building cars business. Yeah.
They're two separate businesses, but Tesla Inc., right, the parent company, down 31% year over year, making a product that the government is subsidizing. Now, to be honest with you, Tesla is the one big Mag 7 stock that's doing what it should right now. It's going down. Right? I think Tesla should be going down. Should be going down a lot more. It's still trading at a 39 PE. But Tesla's coming back to earth. I mean, it's down to 544 billion in market cap, still too high, but down 31% year to date. And let's talk about another one, Rivian. Look at them down 4.3% today. Not looking so good for Rivian. Pay attention, you Amazon owners out there. Amazon owns 16% of Rivian, right? So Amazon's looking to take something like $1 billion hit on their earnings next quarter from the revaluation of Rivian shares, right? We started the quarter at about, 23.50. We started the quarter, currently trading at 9.15. Yeah, that's about $1 billion hit to Amazon's earnings this quarter. I want to keep an eye on that one. The EV bubble we're watching it burst in real time here, guys. And, when you print a lot of money or when you borrow a lot of money and then you throw it at projects that don't generate a lot of economic activity, you're going to get expanded currency without expanded goods and services. That is by definition inflationary. The Inflation Reduction Act did the opposite of what it advertised, which is like the new rule in Congress. Whatever the name of the act is, the desired effect will be the opposite. So Congress, let's get to work on the Make Jack Poor Act. All right. Could we get to work on that today? I will support that. I pledge my support to the passage of the Make Jack Poor Act. We should all be so lucky. By the way, I want to say thank you so much to Mr. Grandpa, who gifted 10 Nobody Special Finance Channel memberships. Thank you, Grandpa, for supporting the channel by gifting those memberships. And guys, if you are the recipient of one of those gifted memberships, let Grandpa know. Give him a thank you in the chat. That was nice of you, Grandpa. Thank you, sir, for supporting the channel. You are a gentleman and a scholar. All right, let's talk about one more here. We got a few more minutes before the market closes. This story I found pretty interesting. This came out yesterday. Globe Life stock drops 50% because a short seller alleged insurance fraud. The stock collapse initially wiped out $5 billion of market cap before the company recovered some of those losses. And I read this short seller report today, and I can't read it all to you guys because there's a lot of inappropriate language in it about what is allegedly happening at this company. If half of it is true, this company is dead man walking. Shares of Globe Life, one of Texas's largest insurance providers, dropped more than 50% yesterday. Now it's bouncing today. It got a lot of that back today. But that was following a short position taken by Fuzzy Panda Research, dig in the name, that alleged potential fraud at the company. Globe Life surprisingly denied the allegations, and the stock recovered some of its losses on Friday. Reuters reports that the short seller uncovered extensive allegations of insurance fraud ignored by management despite being obvious and reported hundreds of times. That includes policies written for dead and fictitious people. Fuzzy Panda's report alleged that third-party policy sellers known to have committed insurance fraud contributed more than 60% of new business at Globe Life's American Income Life unit. That accounted for almost half of Globe Life's total underwriting margins, Reuters reported. Fuzzy Panda's allegations have not been independently verified. That's important. We reviewed the report and found it to be wildly misleading, mixing anonymous allegations with recycled points pushed by plaintiff law firms to coerce Globe Life into settlements. By the way, some of those settlements are involving widespread misconduct towards female members of the staff at Globe Life. And again, I can't read what these allegations are on the air, but they're pretty bad. They're bad enough that when these things first surfaced last year, Warren Buffett dumped every share of Globe Life that he was holding. So take from that what you will. The report is available out there, guys. This is the actual report itself. It really looks like Globe Life was pretty much just a pyramid scheme. That there are guys out there, insurance salesmen who were making $500,000 a year, even though they didn't sell a single insurance policy. All they did was recruit other salesmen for the Globe Life network. And based on the kickback scheme for recruiting new salesmen, they got so much in bonuses, they made $500,000 a year. That's a pyramid scheme, guys. I mean, that when you can make a ton of money without selling a product just by recruiting other people to come in and sell the product. Not sure if it's outright illegal. I'm not a lawyer, but that's pretty bad stuff. So pay attention to this Globe Life. And keep in mind, guys, life insurance companies are basically banks with their business models. And this was a pretty big company right up until yesterday. They had a $10 billion market cap. Right now, they're down to about 4.92. Globe Life Inc. is trading at 59.09. It's up 20% today. But again, you can see here on the 5-day chart that's shown, it bounced from its lows yesterday. It's still a long way off from where it was. I think we'll be hearing more about this subject in the days ahead. And I just want to say thank you so much to my buddy Travis. Travis, bro, you're bonkers, if you will. Thank you so much, sir, for gifting 20 Nobody Special Finance memberships to these 20 new melon heads. And guys, if you receive the membership from Travis, send him a thank you in comments. That was very nice of him. And while you're at it, check out Travis's channel, Real Estate Mindset. His channel is, dare I say it, bonkers. And if you come here from Travis's channel, you know exactly what I was talking about. Enjoyed your live stream this morning, by the way, brother. Thank you, Travis. I appreciate this super chat, sir. And thank you to Troy Rhodes. Says, I have family that live in Covington, Georgia, where new Rivian plant is being built. It's on hold right now. That's interesting. I love that data point, Troy. I didn't know there was a plant being built in Georgia, not the Georgia that Mish is at, by the way. But we've seen similar things with Ford's battery plant. Mish shaking his head at that one. I kind of like that one. I know, the Georgia jokes. I'm sure the Georgians are sick of it. A new plant being built and it's on hold. I wonder why it's on hold, Troy. Was it because of funding? Was it because of lack of demand? Or was it because of worker shortages? Now, I've heard that a lot of the plants that are getting built supposedly under the CHIPS Act, some of those are being delayed or put on hold because they're having a hard time finding personnel to work at them. It's a very, very specialized skill set to work at a chip fab plant, and there just isn't any of that right now in Arizona, or not enough of that. So I know that's been slowing down some of the semiconductor plants that were being funded under the CHIPS Act and the IRA. Is that what's driving the Rivian plant, or is it they just can't get funding for it? But thank you for that data point. I am going to write that one down. That's some homework for the weekend. Rivian plant in Georgia. Thank you very much, sir. I appreciate the super chat, support the channel, and the tip. That's a good data point. All right, guys, it is 4:02. The market is closed. Let's see where we closed at today. The S&P ended up closing down 73.68 points at 5125, 1.42% lower. Where is that on the 50-day moving average? Okay, the 50-day line held. Look at that. The 50-day moving average, it did hold. We got a little bit of a bounce into the close. So there's not a technical breakdown in the S&P 500, at least not yet. Watch that 50 line next week, guys. That's going to be an important one. The Dow ended up closing down 475, caught a little bit of a bid into the close, down 1.25% for the day. And the NASDAQ closed down 1.6%, or 267 points lower at 16,175. And once again, the NASDAQ, if we zoom in here, yep, their 50-day moving average held. We came down today. We just kissed it and bounced off of that level. So watch that 50-day moving average of about 16,060 next week. That's going to be an important level to watch. So it was a pretty rough week for stocks, wasn't it? I mean, let's take a step back from everything that happened this week. It was a great week for metals. It was a terrible, not a terrible week. It was a bad week for stocks. Although the important technical levels have so far held. It was a terrible week for pivoters, for the pivoteers. If you're sitting around waiting for rate cuts, you got bad news this week. And let me just mention one other thing that we never talked about. It's the idea that the Fed can't cut, but they might cut anyway. And that's something I didn't mention up until this point about another reason why gold might be running is because there is no reason to cut here. Right? There isn't. Inflation is still too high. Unemployment is still too low, and it's underemployed. It's a lot of part-time jobs, but there really is no reason to cut. And yet most people are convinced they're going to cut anyway. Well, that's terrible news for inflation, and that is great news for gold. That's another possibility here is as the likelihood of these Fed rate cuts, or as the reason provided for these rate cuts has continued to fall apart in front of our very eyes, a lot of people are saying they're going to do it anyway because number go up. That's great for gold. That's another possible reason why gold is rallying here. And I want to say thank you to Darren from Suffolk who says Ally. That's another one. That's a big one in auto finance. Ally Financial, regional bank reporting next week. Thank you for that one, Darren from Suffolk. I don't think they were on my list. I'm not sure when they report. But Ally, keep an eye on that one because they have a lot of exposure to auto finance. I think they're trying to back away from it. They're trying to unload that. But with a lot of people in their $1,000 car payments, the national average is 700 and change. Car repos on the rise. Ally is one that might be in trouble with that one. Thank you, Darren from Suffolk. I appreciate the super chat, sir, and the tip about that. And thank you to Shane Bell. Yes, Mish.
The CFO on the phone call this morning from JP Morgan said that there's some cracks starting to show in subprime auto sales and auto loans. So even up at the CFO level of JP Morgan, they're starting to talk about there being issues in the subprime market.
In autos, well, that would be very bad news for Ally. Let's shrink me again. I know I'm a little backwards here. We're gonna shrink me again. Let's take a look at Ally here real quick while we're on the top topic. Let's see if they reacted to that commentary from JPM CEO today. Well, they were down 2%. Most of that came around 10:30. Mish, do you know when the JPM conference call was?
It was pretty early this morning, probably right around the time we were live.
Okay, so it looks like Ally shares didn't react in real time to those comments from JPM, but they did react today, down 2%. So that's one to keep an eye on. And the subprime auto financing, we saw a lot of that last year. A lot of those used car dealers or the used car chains that specialize in subprime, will lend to anyone. No good credit, bad credit, no problem. Those guys, a lot of them went out of business last year. So we've seen cracks in auto finance for quite a while now. It's made its way from the chop shops all the way to the CFO of JP Morgan now, which means it's really close to the surface and far more widespread than it was last year. So that's a good one to keep an eye on. Thank you, Darren, and thank you, Mish, for that point about subprime auto. I missed that one this morning. And thank you to Shane.
Hey, while
Bell,
we're here,
yeah.
While we're here, we bring up Bitcoin. Yeah, we'll get there, Shane. Bitcoin, we skipped over it earlier.
Did we skip Bitcoin? That's probably because I closed the chart today. All right, here. We'll give you a trading view chart. Here we go. Let me bring up Bitcoin. There we go. Bitcoin on Coinbase. Ooh, rough day today for Bitcoin. Let's zoom in a little bit. 67,000. Wow, we dropped 3,000 today. So this is interesting. We've never seen Mr. Slammy affect Bitcoin before, have we? Look at that. Look at that big red candle. Let me go to minute candles and just see. When did it happen? Oh, we had a triggering event. It happened at, what happened at 2:30? 14:31 Eastern time. We had a pretty big move. We dropped within a matter of 3 minutes. We went from 67.6 down to 65.1. We bounced a little bit. Something happened around 2:30 p.m. Eastern today. I didn't catch it, whatever it was. All right, more homework. 2:30 p.m. EST, BTC, WTF. Sometimes I can go back and read my notes. About half of them are illegible even to me. We were down. We were drifting down all day, but obviously something happened around 2:30 there that took a big chunk of it out. Bitcoin not having a good day, though, 67,169. But I would add Bitcoin having just 9 days away. Good things typically happen for Bitcoin holders shortly after a halving event. All right, now Shane Bell. Sorry, Shane. Let's get to Shane. L3 Harris laid off 5% of overall staff. All right, L3 Harris. Am I getting them mixed up with L3 Communications? Let me look them up real quick. Let's see if we can find them. L3 Harris layoffs. Thank you for that tip. 8 hours ago. Let's see if I can find something that isn't paywalled here. It has not yet made it to the mainstream news. It looks like it's in Florida today. $10 says it's paywalled. Let's see. L3 Harris layoffs, what we know and what we don't. Okay, Melbourne-based L3 Harris Technologies is laying off workers in a cost-cutting move designed to streamline our operations, the defense and aerospace company said in a statement. Aerospace laying people off. That's weird, especially in this context. The layoffs follow two major acquisitions by L3 Harris last year that were valued at a total of $6.66 billion, plus more recent announcements by the company of moves to get rid of non-core business. L3 in January reported that its 2023 profits were $1.2 billion, up 12.9% from the previous year. So it looks like they've got 50,000 employees worldwide, and they are laying off. The company wouldn't say how many are impacted by the cuts, but anonymous social media posts on a layoff-focused website indicate the cuts are extensive and are affecting employees nationwide. So they're not giving a lot of reasoning here, but that's interesting. There's another one for Macro Edge to keep an eye on that will probably show up in their job cuts tracker. I'm really surprised to see a defense contractor or aerospace company laying people off in this environment. But thank you for that data point, Shane. I appreciate that one. It was not on my radar. It hadn't even made it to the mainstream yet, but maybe we'll be hearing more about that one over the weekend. So, look, World War III didn't start while we were talking, so that's good. It's not all doom and gloom, guys. Could be worse. I mean, they've been warning about an imminent attack for days now, almost like they're hoping to have it happen. You know, is that just the military-industrial complex trying to wag the dog? Maybe. Is it just fear-mongering? Is it trying to distract from some other thing? Maybe. I mean, Congress voted to keep warrantless spying on Americans today. Hey, Congress, keep up the bad work. By the way, you know, never mind that whole Third Amendment, Fourth Amendment thing. Yeah, you know what? Nuance. Just go ahead. Spy on everybody. What's the worst thing that can happen? By the way, if you're one of those people saying if you have nothing to hide, you have nothing to fear, just for a second, imagine you are your 13-year-old self and your mother works at the NSA and is suddenly accessing the camera on your phone randomly. Are you still one of those I have nothing to fear because I have nothing to hide people in that context? Because, yeah, it's not supposed to work like that. You get the warrant. You show probable cause. Then you spy on people. You don't mass spy on freaking everybody because that's when blackmail becomes a thing. That's when the people who are mass spying on everybody become kingmakers because they can find dirt on anyone. And unless you're that guy hanging on the cross, there is dirt on you. All right. Nobody is perfect. Everybody has done something they're not proud of at some point in their life. The government is not allowed to mass collect that data and catalog it for later use. Jack it off your soapbox. Anyways, guys. Oh, wait, I missed Troy Rhodes. Hey, Troy. Thanks, buddy. Appreciate that. He says, also not good news about aerospace. I work for a ball bearing company that does work for aerospace. Business is almost as quiet as crickets. I doubt the things happening at Boeing are going to be any help to you, Troy. So I hope things work out all right at the ball bearing factory. We might get some more color on that next week. We got a couple of airlines reporting next week. We'll find out just how widespread the problems from Boeing are going to be, how much Boeing contagion there is out there. But I think we're probably going to hear a lot of these airlines are planning on cutting back flights, probably adjusting their earnings estimates, probably adjusting their pricing based on that as well. But good luck, Troy. I hope things work out for you. Mitch, you got anything you want to throw in before we wrap up, brother?
Yeah, everybody watched the volatility. We saw this week, pretty much from CPI on, just how volatile the market was. And I think as the market kind of rolls over a little here, volatility becomes much more prevalent. So just be careful and don't do the knee-jerk reactions because it's going to be coming up and down on a daily basis, because even in a bear market, it can go up 5%.
Yeah. And on that same token, be very careful of your leverage and your margin, guys. If you're trying to lever up and, capture big gains from an outside move, or if you're trying to go out on margin, and be careful, man. When that volatility spikes unexpectedly, that's when the margin calls come in. That's when you can be right and you can still get wiped out by a margin call. So just be real careful. When volatility has stayed so low for so long, that's not good. That's like the quiet point in the movie, and you're just like, oh, there's some cheap scares coming or something's about to blow up. And then it happens and and it got you anyway. Be real careful on margin. Be real careful with your leverage. Don't play them silly games, because then there's just guys like JP Morgan's criminal enterprise trading desk. Those are the DOJ words, not mine, by the way, that they can just go out and stop loss hunt and just wipe you out. They did it hundreds of thousands of times for years. They paid a token fine and got away with it. They prosecuted 3 low-level traders. Everybody else walked away scot-free. So just be careful, guys. It's dangerous times. All right. Thank you, everybody. Thank you so much to Mish and my blue checks for keeping things neat and tidy in the chat. I appreciate that, guys. Thank you, everyone, for the super chats. I appreciate the generosity, and thank you to all my Patreon supporters and channel members for supporting the channel. Links down below to all that good stuff. Guys, have an awesome and safe weekend, and we'll be back on Monday. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.